We have got our eye on the equity markets for the time being. Manisha joins us. She's going to tell us what's going on in the commodity markets as well. Manisha, take it away.
Well, thank you so much for that. I want to take a look at the precious metal prices, where last week was a grand one. You saw gold and silver prices both gain quite strongly. Gold actually was up 5.5%, making it the best weekly gain in last 2 years in that sense. The prices did gain from a low of almost 25.70 on the lower side, 25.40 by the way, and did see 2700 on the higher side. The Asian markets right now, though, are headed in for a bit of a profit taking on those kind of levels. So 1.5% of a decline, as you can see. But that is the range, 2536 to 2700, that we have seen in last 10 days come in for the gold prices. And with that, I also want to show you on what we've done in sense of gold prices in last 3 or 4 years. Well, it has been higher highs and higher lows, as you can see. Higher highs first, and we have seen prices continue to gain up. 1890 was a high in 2021, and then we've seen 1900, 2000, and almost 2800 in this year by now. The lows also have been on the higher side. Well, we saw 1700. It was only last year that we were trading at 1810, and 1992 has been the low for this year as well. Far away from where we are looking at in sense of highs and sense of gold there. So absolutely very strong real returns that you have seen gold give you in last many years, as you can see on your screen there. Well, it has to do with this very strong global central bank buying, where many of these banks have been adding gold to their forex reserves. It also has to do with the flare-up in the Russia-Ukraine war there. The markets are looking at safe haven buying continuing in case of gold there. The hedge funds have come back in a big way as well. It was last week that we saw net longs at a 15-week lows. But since the escalation and since the fact that we've seen markets continue to look at Trump impact on various taxes and infrastructure, etc., gold has seen buying come back because of that as well. And then this is going to be a 6th straight week in the month of October that you are looking at the global ETFs come into gold in a very strong way. The dollar index today is trading at a 1 year off as well, and that has been supportive. But the global ETFs now stand at around 3,244 tons. If you look at the overall AUMs, those have gained up by 33%. 5% of a jump up is what we saw in the month of October alone. For the Indian markets as well, the buying has been strong, whether it's about physical buying, ETF buying, and the futures and options also are hitting record highs there. For this year as well, even as the gold prices are trading at an all-time highs, you could be looking at imports anywhere between 700 to 900 tons. Well, going forward, all the Wall Street banks and brokerages do estimate that you're looking at higher prices from here on. So $2,900 to $3,000 an ounce is an expectation coming in from UBS, Goldman Sachs and Citi. This week is going to be quite important because you have so much of data coming in. Remember, it also is a truncated week because Thursday is Thanksgiving in US, Friday would shut early, so it's really is a truncated week. But ahead of that, before that, you'll have the FOMC minutes come in, inflation, personal income spending, inflation data also from Australia and Eurozone, and then you have GDP numbers also coming in from India, Canada and various other countries. So a very data-heavy week, even as it's truncated, and the markets do believe that you could see some gains continuing in case of gold.
Okay, so gold will continue to sparkle in all probability. Got that, Manisha? Thank you very much. As we